Hello dear traders, I'm Anna Kasatkina. Let's take a look at the most important financial events for today. Yesterday, the US initial jobless claims report revealed fewer number of layoffs than expected. The import price index suggests acceleration of inflation. In light of these reports, markets are expressing faint hope of the soonest rate hike in the United States. However, strong reports propelled the US stock indices. Yesterday, three main indices closed at record highs for the first time since 1999. Besides, stocks rose across the board in Asia, catching an updraft from the US. The climb of Japan's Nikkei stock average weakened demand for the Japanese currency. The dynamic of the dollar-yen pair indicates that traders are opting for the US dollar. The pair rose to 102.10. The US currency tightened its grip on the Australian dollar. The Aussie lost ground after a series of macroeconomic statistics from China. China's retail sales grew by 10.2% on year in July, showing marked contraction from solid 10.6% growth in June. The figure came in below the median forecast of a 10.5% increase. China's industrial production also slowed down a pace of growth. Last month, output of China's factories rose 6% in annual terms, down from a 6.2% gain in June. Analysts expected the same pace of growth in July. The disappointment with China's crucial indicators triggered sell-offs of the Australian currency, as Australia is the top supplier of commodities to China. The Australian versus the US dollar pair declined to 0.7675. Today, traders focus on the retail sales report from the US. This indicator is seen as a barometer of the US economy's health. Indeed, consumer activity accounts for over 70% of US GDP. The report will determine trading sentiment ahead of the speech of US Fed Chair Janet Yellen. She will speak at the conference in Jackson Hole on August 26. In her speech, market will search for clues to further moves of the central bank. And this was Daily Financial News on Insta TV. Thank you and goodbye.